So hello and welcome everybody to the course INDUCEMT. So in this session, I will be talking about the topic inducement, right? So how I see inducement. So inducement is a type of liquidity which is found around the point of interest area. So let's see if we are in bullish trend here. This is the last high. After making this last high, price forms some sort of base and dropped again towards the downside. So you might have some sort of lows is formed just below the point of interest. Like this is the last high of yours, and just below the last high, there will be some sort of base formed, or maybe some sort of equal highs will be there. So that will be known as the inducement. So what you will do, you will look for just buy or sells above that inducement, and you will mark this inducement here. So this will be your inducement and targeting the lows. So even if you're looking for cells around the breaker area, so this will be your breaker point of interest. Okay, and just below your point of interest, you might find another inducement here. So that is how you consider the inducement. Okay, so this will be another inducement here, and your point of interest will be here, and this will be the inducement. So inducement will be some sort of that kind of highs or equal highs which is found near the point of interest areas. So and same thing in for bullish market. You might find inducement here just around the point of interest of yours, and first point of interest, and this will be another point of interest like the breaker area. Okay, so this will be your inducement here. So you can look for buys around any of those point of interest, having stop losses below the level and targeting the internal liquidity. All right. So you can have this as a point of interest and this as a point of interest. Okay. And these two will be the inducement of this high, this week low, week high, and this week high. Okay. So that is how we see. And inducement are those like if price making higher high, higher low, higher high, higher low, higher high, and drop. So if you see there might be a bullish candle, okay, and just below this bullish candle you might find some sort of fair value gap here. So you will see some sort of fair value gap here, and just below the fair value gap, just below the fair value gap, you might find a base or equal highs. So that will be your inducement. So what will happen, you will have your point of interest just here, and this will be your inducement. So market will, price will come again here, take out the inducement, fill the fair value gap and drop. So that is what it is, like the inducement thing. So let's just go on real chart and explain these things to you. So this is USD chart. So what happened here, there was a liquidity grab here, okay, and price has given a up move, break in market structure in here, and another break in market structure in here. So you see These equal highs, equal lows will be your inducement. All right, and you see we have a fair value gap in here as well. So the point of interest will be this candle, and this will be your inducement. And what happened next? Prices came again, filled this inducement, and gone upside. All right, so let's just go on 15-minute time frame. Find another inducement here. So what happened here is price has given a break in market structure towards the upside here, and this low failed to fill this fair value gap. Okay, this low failed to fill this fair value gap. So this will be your inducement, and this will be your point of interest for buys. So can you just look for buys here, set the limit orders here, and this will be your confirmation entry on targeting the previous highs. So that is how these things works. This can be a good 1:14 risk-reward trade. Okay, so that is how the inducement things work. And let me give you more example. So you see this low taken out this high. So we have a break in market structure towards the side. And after making this break in market structure, we have this low which failed to fill this fair value gap completely. All right. So this low will be the inducement, and your point of interest will be this candle right here. So what happened here? We just put your limit order or entry in here, targeting the high. So that is how these things works. Okay, this will be your inducement, and we just go for more explanation. So now see what happened here. So this is a GP a UD chart. So you see this last low has taken out this high as well. This high. So we have a break in market structure towards the upside, and this last low has failed to fill this fair value gap completely. So there is still some fair value gap left here. So what I was waiting for, I was waiting for price to come around this block, and this was inducement here. So this just became my point of interest right here. I was looking for buys around here. But what happened next? This has given some sort of buy move here, like some 10 pips, something, 13 pips, and then just hit my stop loss right down there. So it might work sometimes, it might not, but it's all about probability at the end and trading. So you just have need some good back testing for understanding of this concept. Okay, so this is the last high you see, and we have a breaking market structure towards the downside as well. Right. So we have a fair value gap from this high to this low. So this equal high can be a good inducement for you. Okay, and you might have point of interest just at this candle, and you can just look for sell in here. So that can happen, that cannot, but this is the inducement how we use and how I use the inducement thing. Okay, so that's it. That's for this video. Hope you enjoyed it.